This is your LMAX exchange technical update for Friday, November 3rd, 2017. Euro dollar. So the euro has just been consolidating after breaking that neckline over a week ago, and the market taking its time ahead of what could be a resumption of declines. Overall, while the market holds below the right shoulder of this head and shoulders top, which sits up at 118.80, any rallies are viewed as corrective now in favor of what could be a lower top and fresh downside extension. Next key support comes in by the recent low that we saw at 115.75, and support comes in really in the 115.50 to 115.75 area, because 115.50 is the objective off of that minor head and shoulders top that triggered all the way back earlier in late September following the break of the 50-day moving average. And so 1550 to 1575 is support below, while above we're looking at the possibility following this break back above the neckline of a rally back towards the 117.50 area, where a lower top would be sought out in favor of this resumption of decline. So again, overall, even if the market pushes up in the sessions ahead, it should be well capped in favor of continued downside, and only back above 118.80 would compromise the bearish outlook for the euro right now. Sterling dollar. So cable has seen a collapse in Thursday trade, with the market coming under some intense pressure. The breakdown, though, does still leave the market confined to what has been a range that we have talked about over the past several days, between 130.27 below and 133.38 above. The market, as we've said, would need to break below or close below 130.27 to suggest we could see more downside, while a pushback above 133.38 would open the door for a continuation of gains back towards a retest and break of the 2017 high. So we have to continue to wait and see how the market responds. Until then, it's just confined to this range. We will highlight that in light of the downside pressure, if the market does want to close below 30.27, ultimately here we see the market exceptionally well supported on a dip into the 127s. Dollar yen. So dollar yen has pushed back over the past several days up to a critical range high from this year. You can see that the market's been well capped in the 114s. We did see a bit of a poke up earlier this year above 115, but for the most part we're into range highs here, and the market is expected, until it shows us differently, to stall out up here ahead of a resumption of declines and adherence to this range trade. Back below recent support, which comes in around 112.95, a close below there would strengthen this outlook and accelerate declines. And at this point, we would want to say only back above, ultimately, the 115.50 area would compromise this outlook. Euro Swiss. Euro Swiss has been very well bid over the past several weeks. The market has seen a bullish breakout in 2017 above 110 and now above 112. And so the market has continued to accelerate to the top side and is looking for a fresh move, fresh 2017 high, and more than that, as it's at its highest levels now since back in January of 2015, when the market broke down below that much talked about 120 floor. But overall, the focus now is for a move back towards that level, with any setbacks seen well supported ahead of 112. Aussie dollar. So Aussie dollar has seen a bit of a bounce after the market was under some intense pressure off the 2017 and plus 2-year high. The market could see a bounce extend over the coming sessions, but ultimately, while it holds below the 79 area, which is a previous lower top, the pressure does remain on the downside. Dollar CAD. So dollar CAD has seen a very impressive recovery out from its plus 2-year low just shy of 120. The focus here is now on a move up towards 130 in the sessions ahead, although we have seen a pretty intense move on a short-term basis, and so we could see a pullback back into the 126 area before the market looks to head higher again. But right now, the focus here is on the top side. Look for setbacks to be well supported into the 126 area in favor of a move eventually back up towards the 130 barrier. Kiwi dollar. So the New Zealand dollar has bounced out after retesting and just matching that 2017 low from May. It retested it the other day. The test came on the 27th of October. The market is now in the process of bouncing. Technical studies on a daily chart were oversold, and so it does make sense to see this market a little bit higher. Ultimately here, rallies should be very well capped, ideally ahead of the 71 area in favor of the next major downside extension. Only back above 72 would compromise the bearish outlook for Kiwi dollar. SPX 500. The S&P 500 continues with its push to record highs. There's been no signs of any changes here just yet. The readings on a technical level, weekly and monthly, are well extended, but there's been no signs of any confirmation short term of a reversal. We would need to see at a minimum a break back below 25.44 to suggest that the market is looking to break lower or to, at a minimum, alleviate immediate topside pressure. Until then, the focus is on a push to and through 2600. Gold. So the outlook here is the same. The market has seen some intense setbacks over the past several months, but each and every time has been well supported in favor of higher highs. Most recently, a 2017 high in early September at 1357. Look for the market now to be supported ideally ahead of 1250 in favor of that next major upside extension back above the 2017 high at 1357 and towards a retest and break of the 2016 peak at 1375 further up.